Think of capital gain reporting as a two-step workflow. Step 1 is listing and adjusting each sale. Step 2 is netting everything into one final number. Form 8949 is the detail sheet where you report each disposition and any adjustments. Schedule D is the scoreboard where totals get combined, netted, and carried to the return. On the EA exam, they love asking which form gets the details versus the summary. Form 8949 has two parts, and the split is all about holding period. Part 1 is short-term, held 1 year or less. Part 2 is long-term, held more than 1 year. Each line is basically description, dates, proceeds, basis, then adjustments like wash sales or basis corrections. If you're given a scenario with multiple trades, this is where the exam expects you to park the line-by-line math before you summarize it. What kinds of transactions show up on Form 8949? Most commonly, stock and bond sales reported on Form 1099-B. Real estate sales can show up too, especially when you're working from a Form 1099-S and you're treating it as a capital asset sale. And crypto is a classic exam trap. You might not get an information statement, but you still must report each taxable disposition. Number 1099 doesn't mean no tax. Here's the key shortcut. Sometimes you can skip Form 8949 and report directly on Schedule D. Generally, that's when you have a Form 1099-B showing basis was reported to the IRS, and there are no adjustments, especially no wash sale adjustments. The moment you need to adjust basis, correct holding period, or handle wash sales, you're back to Form 8949. On the EA exam, wash sale is a giant arrow pointing to Form 8949. After Form 8949, everything rolls up to Schedule D for netting. Netting is just combining gains and losses in the right order, short-term against short-term, long-term against long-term, then the net short-term and net long-term against each other. The result is your net capital gain or net capital loss for the year. If it's a net loss, individuals are generally limited on how much can reduce ordinary income, with the rest carried forward. Let's tie it together with a realistic workflow. You gather trade confirmations and any forms 1099-B, 1099-S, and crypto records. You list each sale on Form 8949 in the right part, short-term or long-term, and include any adjustments. Then you total each category and transfer those totals to Schedule D. Schedule D nets everything and produces the final number that flows to Form 1040. Details first, scoreboard second. Which of the following items does not decrease an asset's basis? Choices include the cost of defending title to the property, Section 179 deductions, a casualty loss, and a manufacturer's rebate. Think about which one is treated as a capital cost instead of a reduction. The correct answer is the cost of defending title to the property. That's a capital expenditure, so it increases basis rather than decreasing it. A tempting wrong choice is the manufacturer's rebate because it feels like income, but it usually reduces the purchase price, which reduces basis. Marisol received 500 shares of restricted stock from her employer on March 1, 2023, but she forfeits it unless she completes 5 years of service. The stock's fair market value on March 1st was $15,000. How much does she include in income in 2023? And what is her basis in the stock? Options range from including $15,000 now to reporting nothing until it vests. Think about it. The correct answer is that she generally reports no income and has no basis until the stock becomes substantially vested after completing the service requirement. The key phrase is substantial risk of forfeiture. A tempting wrong answer is including $15,000 now, but that would generally require an 83B election, and the question doesn't mention one.